Everyone, it's Nick with Us versus Herd. If it's your first time here, you like the content, hit subscribe. If you want to get notifications from when we go live, tap the bell for notifications. And if you want to join the UVH fam, links are below. Whoa. To our Discord and our free options trading group in Facebook. If you're here right now, say what's going on. Matthew, Keith, Jeff, what's going on, guys? Got paid. Matthew got paid. Nice. Glad everyone got paid. Right now, looking at LULU earnings. Lululemon. Yeah, it's currently down about 12 points. The expected move on Lululemon was 17 points, so we're still within the expected move here. Markets were overall pretty flat today. Again, I did call out on Monday. I said, hey, the markets are probably going to be flat this week due to all the uncertainties. Now that we got the Fed over with, the Fed, they kept rates unchanged. They also said here, I got it right over here. They also said that they don't see a rate hike in 2020. However, I don't think they said that they wouldn't cut rates in 2020. They just said they wouldn't raise rates in 2020. So, so that's kind of where things are. So the Fed's kind of what we expected. They're in a holding period. But Lululemon, they beat EPS. However, they lowered guidance. Quarterly earnings and sales top analyst estimates. Company says same-store sales are up 17%, but a fourth quarter outlook comes up short of Wall Street expectations. That's the thing. That's what I want to say. Like, new traders get confused. I'm like, oh yeah, they beat earnings, but you have to remember about guidance, because guidance, people invest for the future, not what happened yesterday. So they're reporting on Q3 sales, and they're saying, hey, this is what happened last quarter. Things were good. However, moving forward, we're looking to have a little bit of slowdown here. Basically, they loaded guidance. So investors, people that are shareholders and holding stock, they are thinking into the future. It's like, hey, where is this investment going? Should I get off? Should I get on? What's gonna look like in the future? And that's what guidance is all about. Raising the guidance, lower the guidance. It's a picture. It's a view into what the company is going to be doing in the future. So, people get confused. Just because they beat earnings doesn't mean that they're going to be doing well in the next quarter or in the next year. I mean, sometimes they slash guidance for a full year, and that really hurts the stock. Like, oh yeah, we had a great quarter, but we slashed guidance for a full year. So they beat 96 cents versus 93 cents. Beat on revenue as well, 916 versus 899 million. And store sales. So, I mean, last quarter was good to them. Hopefully they have a good holiday season, but we don't really care about that right now. What we care about is what the stock is doing for tomorrow. Because what we have on here, I'll go through my trades here, but while we're on the topic of Lululemon, my trade is, okay. So my trade is I have an iron condor on basically need to be between 215 and 255, and right now it's at 222. I was basically playing the one standard deviation. I was straddling the one standard deviation. So here's the one standard deviation line here. This, I believe, was in the one standard deviation line. I'm not sure, but I'm thinking it was. But, I mean, there's some pretty heavy volume on these calls and the puts. I mean, people were expecting it. I wouldn't be surprised, honestly, if Lululemon comes back up to 230 tomorrow and opens up flat. Like, I want to say for earnings plays, I mean, I have been very careful about the earning plays that I have been doing. But the ones that I have been doing, I want to say the majority of them have been coming up flat. I mean, I've only sold premium during earnings since for this quarter. And I want to say that the stock plays that I have chosen to do, I mean, most of them have come out flat. You know, God bless. But we'll see. We'll see what happens with Lululemon. Right now it's 223. So I was actually having a little bit of hard time getting this one filled. It filled for $1.51. I was trying to get filled for $1.55 to $1.60, and you know, they made me come down to $1.50. I got filled at $1.51. You know, examining this trade here, going to the curve here. Examining this trade here. Now let's say, okay, so let's say, so I really need it by expirations. These are by expiration. I need it to be like you know, I break even here is like 213 and 256. So anywhere between there by expiration is where my break even is. Obviously, you don't want to be going. The thing is, you don't want to be riding short strikes into the money during expiration, because then you could get assigned and it gets kind of sloppy. So if I'm riding, like, let's say it's like on the downside, let's say I'm riding 215, I'll probably try to roll that into the next week. But let's look into what happened. So, you know, implied volatility, IV percentile was at 120%. You know, even if these come down, I'm thinking there's going to come down at least 30% tomorrow, unless we do flat. Let's say it comes down to 40% tomorrow. You know, if it comes down 40% tomorrow, you know, we'll be making, let's see here, tomorrow. You know, we'll be making, let's say it's at 222. So roughly about $80 on, so about 50%. So about 50% I would be making. So a little bit more than 50%. Around here, if it opened up around 222 right now, I'd be making about $80 tomorrow. And it comes down. Let's see what it looks like if it comes down like 30% in IV percentile, because Lululemon seems to keep a high IV. Jeez. Is it amateur hour here? Let's see here, 222.50. So if IV comes down 30%, you know, I'll be making about $63, which is still almost 50%. So it's not bad. Daniel, how you doing? Appreciate you guys stopping in. I do have to say, one thing I do want to say about starting a new channel for the live streaming has been a little bit more difficult than I thought. So normally we have anywhere between 30 to 40 viewers, and we've been averaging like 10 since we came over here. But I think it'll grow. But I'm willing to sacrifice in the beginning, because long term, I have a vision. You know, I have a vision. You know, on the main channel, I want to do videos. I don't want to just do live streams all the time. I want to do helpful videos to help out traders and get insight and make different content. But I noticed that when I was just live streaming every day, that was my video for the day, and that was all I would do. So this kind of forces me outside of the box and separates the live stream from the other content. And, you know, it's a little, starting something new, you know, it was definitely risky. You know, at the end of the day, I could always go back to doing what I was doing before, but I wanted, you know, for growth purposes in anything, you know, whether you're looking to transition to a new job, whether you're looking to get paid more, whether you're looking for a raise or whatever, something has to change. You have to do something to change something. So I did. So right now, that's what I'm looking at Lululemon for. But yeah, so I think that will be good. Will be good. Right now, Lulu is at 222, so it's kind of in there. Yeah, if you guys enjoy the content, hit the like button. Now going into my trades, so my day trades were pretty bad. Not so bad that I lost a lot of money, but just bad. But first trade of the day, Boeing. So Boeing, I lost $42 on. I bought it at $8.51. I sold it an hour later for $1.10. Bought it for $1.52. Sold it for $1.10. Man, you know, so I knew with Boeing that. So if you guys didn't know, Boeing had some sort of whistleblower testifying today, and I knew this was going to be good, and I think that I got shaken out, so I bought it at 851. I had a good entry. I think the issue is on this one, I jumped the gun. I got into Boeing too fast. I should have let it sit. I just thought I was going to bounce back because it did hit in the first 15 minutes, 338. I bought it at 851. So I bought it right in here, which is a pretty good entry. And I was anticipating that I was going to try to push up, and it did try to push up to like the 342, 343 area, and then it failed, and I bailed once it hit, like the 338, 339 area before it started to have the reversal. And they just had like a huge shakeout on Boeing. And what I was looking at was this 340 line. I've been waiting for this to happen. The reason why I jumped on it is because I've been at night. I've been monitoring the charts. I've been looking for entries, and Boeing at 340 was one of my entries, and I blew it. This was terrible execution on my part. Entry was good. I've been looking for like a 340 bounce. I just didn't think it was going to bounce that quickly. I didn't think it was going to move that quickly. So it is what it is. So I was looking at this 340 bounce area down in here. It did, but however, I got shaken out once it dipped here, and then it shook me out and it ripped up. And that Boeing trade, so I bought it for $1.52, and I bought the 355 call for next week expiration. And I think that's one of the issues. One of the reasons why I took it off is because it's for next week expiration, and also I didn't really want to hold anything. I didn't want to be bag holding anything till Friday because we had the trade news. So I think that kind of skewed my mentality a little bit. When it comes to options trading, you really need to stay diligent in your beliefs. And what's the point at the end of the day? What's the point of charting things and doing the research if you just are gonna blow it like this? You know what I mean? Like, you gotta stick to the chart. You gotta stick to your guns. I mean, sure, there's outside factors like the trade news, and unfortunately, Boeing is one of those. Oh, look at this! This is embarrassing. This is very embarrassing. So I bought $1.52. Guess what? Low of day. Here's Nick Chow right here. Low of day, $1.10. Here we go. Look at this. Sold it at $1.10. Thankfully, I didn't buy it up here at $1.85. Sold at the low of the day. That would have been really embarrassing, But either way, it doesn't make me feel very good that I sold. I was one of the contracts that sold here for $1.10. I sold at the low of the day. It's terrible. This would have been a 100% winner if I held on. I probably would have sold it like $2 or $2.50. I probably would have sold it right in here. I would have never let it run to $3, but But this kind of shows you the good news is that the charting and the entry and the time that I put in paid off. The bad news is that one of the lessons that I learned is just being diligent today and staying patient. And I think that the trade news really skewed my belief on this because of the trade. Whatever happens to the trade war, the trade news this week, Boeing is impacted pretty big. So it shook me out, man. Shook me out. I don't know if anyone else here played Boeing, but that's the lesson I got from Boeing today. So luckily it wasn't like a huge loser or anything like that, but it was more about principle and that I put the time in, I put the plan together. It came together. Entry was on point, but exit was very poor. Exit was poor. Got shook out. Same with NVIDIA. So NVIDIA, I traded NVIDIA as well. Only lost $20 on this one. I did cut it. I stayed pretty disciplined. So NVIDIA, what I was looking at here, I had the 215 put. Bought it for $1.85. So I bought that at $9.38. So when it was having trouble in here, I bought that put because I thought that maybe it can kind of bounce back down to like the 214.50 area or 214 area, kind of where it closed yesterday. Go zero on the day and then maybe bounce back. But what got me out was it bounced right off of 215 and ripped back up to 216. So I got out at 1024. So I got out on this candle here. Once I knew this hard bounce, I just got out. I exited the position, $20 loss on that day trade. So, I'm glad that I definitely glad that I took that trade off, because I was trading this week's expiration too. So you don't want to have any mistakes. Yeah, it's now going for $1.15. I sold it for $1.65, so I would have lost another if I held. You don't want to, when the market is slow like this, you don't want to be bag holding. And that was one of the reasons why I exited Boeing as well. But turns out, this exiting early did save me once it bounced off the 215 area, because this one I sold it at $1.65. This ripped down to $1.05 at the end of the day here. So okay. And then the one trade that I did fairly well. So yesterday I put a call credit spread on Peloton, PTON, and I sold it today for a 50% winner. One thing that I will say about trading Peloton was that getting a fill on it, you had to be patient. Bid and ask. I mean, there was volume. Let's see here. What kind of volume do we have? I was trading next week expiration. Yeah, volume was okay. I mean, on these calls, we have 2.76K on the 33s, which I was the one I was selling. 33, and I had 34. I had 698, so it wasn't that bad. But the bid and the ask, 10 cent wide. I was having some troubles getting out of Peloton, and I was selling the. I sold 2 of the 33 calls, and I bought 2 of the 34 calls for 44 cents. Sold them for 22 cents, and if you're looking here, it took a massive rip. So what I did was I was playing around. I was trying to get like 25 cents. I went up to as high as 27 cents. Didn't get filled. So then I just said, forget it. I'm gonna put the order in and just let it chill. Someone will probably scoop it up. And sure enough, they scooped it up at 9:32 this morning. So about an hour in. So when it was dipping here, actually, that's why I like to when I'm selling premium, especially when I'm selling premium on stocks that aren't, when the bid and the ask is a little wide, I like to queue up my orders and see if they get hit. So I try to queue my orders up, and you could see that this definitely came back. So this one, I definitely think that it was worth 50%. So that's why I put that order in. I did try to go up. I was playing around with the option pricing a little bit, and it wasn't getting filled. So I just said we're just going to be patient and wait. And in the market, I think that we can all testify that being patient on your entries, being patient on your exits, I mean, it pays off. So this was a nice little win. It wasn't. I wish I did more contracts, but we'll see what happens with Peloton if they're going to just bounce here. I thought that my idea yesterday was going to hit 30. It did hit 30 and below and bounce back up. Looks like it likes that area here. The 29-30 range has some sort of support, and then it bounced back up. So we'll see what happens. We'll see what happens. Let's see what Lululemon is doing right now. Lululemon 223, yeah, back to flat. Go back to flat. The one thing that I do worry about is exiting my position tomorrow on Lululemon, because I had a heck of a time getting into Lululemon. I'm assuming I'm going to have a pretty hard time getting out of Lululemon, especially when I sold calls up in the 255 area, which those are probably going to have to expire worthless. I'll put my order in, but what I'm probably going to have to do on Lululemon is split the orders. So I'm probably going to have to close out Lululemon, just select the calls, and bring this down to 5 cents or 1 cent or 3 cents. So I'm gonna have to split the calls off, and then I'm gonna have to put another order in. So I usually, when you have an iron condor this wide, a lot of times to be able to exit the position, you do have to split up this way. So then I'll have to put an order, select the puts for the put spread instead of selecting it all, because a lot of times if you select it all, you put the whole order in and you try to get when you try to close it out when you know a side is worthless, you're not going to be able to close it out. So it's better to take the side off that's being tested and then put, if let's say tomorrow Lululemon's being tested at like the 215 area, let's say, I'll probably take this trade off, get what I can for it, and then I'll put in a 1 penny order for the call side. So I'll just put in a 1 penny order. So that's probably what I'll do, right? If it's in the middle here, what I'll try to do at open is I'll probably try to queue up an order right now, so I could just queue up an order, maybe put in an order for like 20 cents and see if it fills. But the problem that you'll have with these is getting filled on these strikes here. So these might actually have no bid. These 210s, like the 210 puts may have no bid, and the 260 puts may have no bid. So I don't know if anyone's gonna want to buy those calls or puts that far out of the money. And we're coming up, tomorrow is Thursday, so we don't have, the likelihood of it hitting 260 or 210 or being within the expected range is very, very low. So hopefully I can at least sell those for a penny or two, and then we can exit the position. So that's kind of how I play earnings. If it's kind of coming in like that, that's how I'll play earnings, to split the iron condors up. Because what happens with a lot of traders, especially like if you're on Robinhood and you're trying to get exit an iron condor like that, and you're not getting filled, and you adjust the price and you're not getting filled, you're most likely going to have to split the order. And it's just the way it is, It's not like you're not going to pay any nowadays, since they change the option price, the option commissions on TD Ameritrade and all that. It's not like you're going to be saving yourself any money on commissions, because now they charge zero base and they're just charging per contract now. So what stocks you guys want to look at? Any stocks you guys want to look at? Right now, what I can foresee is we're waiting to see what happens with the trade news, and I have a feeling that they're going to push this to the they're going to push this into the 11th hour. It's going to be, 11 p.m. on Saturday night before they make a decision. The one thing that will be interesting is, let's say there's no deal. Will they then say we're not going to do the tariffs, or are they going to try to strong arm them and say, hey, we're going to do tariffs anyways? Because I feel like it's like everyone forgot about the trade war. They're not going to forget this weekend when they have positions. For me, I'm not going to have any positions going into the weekend. I'm just going to be taking my money out. I'll be sitting in cash, and then I'll trade the reaction and see if we can get some good deals, see if we can get things lined up. Typically what's been happening is the trade war it dips for maybe a day or two, and then it's a buy the dip opportunity. That's just where we're at right now. So the market will take a hit. Maybe we'll sell off, 200-300 points on the Dow, maybe 400 points, maybe even 500 points on the Dow. But we'll most likely recover. Trump will just tweet something and says, trade talks going well again, and then peace out for a couple weeks, That's what seems to move the market. But for the S&Ps, I'm thinking that we had a dip here, got bought back up, and for some reason there's no fear right now going into the weekend, and the media is not really hyping it up. So I really feel like the market's not pricing in anything right now other than this run. So I think it could get a little scary. If you were to trade one, which would you go for, Microsoft or JPM? Microsoft, I haven't traded in a long time because it just gets stuck. I think on Microsoft, the way that you approach Microsoft, or the way that I approach Microsoft, is if Microsoft has a huge dip, like down here to 147, you buy the dip. If it falls, you buy. If it falls, you buy. Shorting Microsoft, I definitely don't recommend because I do get upgrades and stuff like that, and they're doing well. But the problem is it's a very, very slow mover right now. You have to be very patient. If you're going to be trading Microsoft, buy contracts that are at least 3 weeks out because you could get stuck holding the bag just watching theta burning to zero. JP Morgan, I like JP Morgan a lot better because you can see there's actually a movement on the stock. Now with the, there wasn't a whole lot of movement today. However, this has run from 130 up to 135 this week. So I like JP Morgan a lot better. I would like it to come back down to 130 and then push back up to 135, but we'll see. We'll see what happens with JP Morgan. When trading options, unless you're selling options, you want the stock to move. You want movement. If you're buying options, especially because you want to be able to capture those deltas. If you're trading at a 50 delta, 40 delta, or even let's say 80 delta, you want the stock to move so you can capture that. If the stock doesn't move, then you're just gonna be bled out. But so for me, JP Morgan's chart looks a lot more interesting. Microsoft, it needs to be an event. You need to really buy the dips. Microsoft isn't going anywhere. They're one of the strongest companies out there. However, it's gone from 93 to 152 this year, and it's really it's been having a hard time, breaking out. This is, if you want to trade this is very tradable here from like 135 to 140, but it's predictable, it's boring, and right now I feel like it's consolidating again. It's having a hard time trying to break out to 155. So, what is it going to take? What is it going to take for Microsoft to get higher than this? I'm not sure. They might. The one thing that I'm wondering about, like 2020 stock market, I feel like the 2020 stock market, because we're going to have the election that year, and stocks have been running since 2017 nonstop. We did have a red year in 2018, but sooner or later we're going to have a consolidation year like we did in 2015, where it's just kind of pinging back and forth. If we look at the last 5 years. We pretty much just ripped. Since 2016, we've been ripping. We did have a red year, which is pretty much the trade war induced, and then we recovered, and now we're back up here. But I'm thinking, like, if you look at 2015, we did have some scary moments, but mostly it was very mostly consolidation. If we look in here, mostly it's mostly SPY was resting most of the time between 198 and 212, which is not, which is a very tight range. It wasn't moving a whole lot. SPY is 314 now. We get some movement on there, but it's pretty much the whole year traded between 198 and 212. So I'm thinking sooner or later we're gonna have some sort of consolidation periods. We're due. And then let's see what the IV rank was. Implied volatility. Where are you? Implied volatility. I hate the menus in here. So implied volatility was pretty much low all year round. So, but made it pretty predictable to trade options, and then even if you were trading like this range right in here, let's see, right in here. Couple different ranges in here. You know, if you were trading, you know, 204 to 212, 204 to 212, 204 to 212. I mean, it was pretty much rinse and repeat all year in 2015. So I'm thinking that there's going to be consolidation. Tobin, what's going on, man? Glad to see you here. But I don't know. What do you guys think? Are we going to have a consolidating year in 2020? Are we going to the moon? The thing is, like, we need. I feel like the stock market needs consolidation because we can't just keep going up. Because that's how the tech bubble in 1999 and 2000 ended. We just pushed up into oblivion and we exploded. You know, we can't just keep going up every year. We need some sort of consolidation where we need, you know, I'm not talking about having a red year. I mean, maybe we're up 1 to 3%. We don't need to be up 30% in a year to be successful. You know, if it consolidates for a year or two and then we go back up, I mean, that's fine. You know, I think that this would be ideal to maintaining a bull market, and also it would be ideal as an options trader to be trading these types of ranges. All right, so any stocks you guys want to look at? I mean, I went through my trades. LULU right now, what is LULU? Lululemon's at 223. I know Keith was trading. Keith had an Iron Condor as well. He was a little bit more safe about this. He also bought the 255. He shorted the 255 call and bought the 260 call, which I did, but I bought the 215. I mean, I sold the 215 put and bought the 210 put, and he did the 212.50 and the 207.50 on the put side. So I think Keith will be killing it with Sage today. Nice. I don't know what. I don't think I've ever traded Sage. Which one is it? Let's see here. Sage Therapeutics. Let's see here. A pretty nice $3 range there. Options liquidity not very good, but if you get good pricing. Yeah, starting to have a rebound here. Let's do coming down to the 60 level, rebounding, and that took a dump. that thing took a dump. They even made it through earnings here, as you can see, but they couldn't make it through whatever news this was that dropped them down. Crazy, but yeah, looks like a good bounce play. These options aren't too expensive. Monthlies are better. Like the 70 call here on the monthly, you know, I got 855 volume on that, so that's not so bad. All right. All right, guys. Well, I covered all that I want to cover. I'm going to be making some more content today. So, you know, as always, if you like the video, hit the like button. Stay safe, stay green. It's us versus herd.